I'm joined from our Melbourne studio by Dale Gillham. He's the Chief Analyst at Wealth Within. Please welcome finance expert Dale Gillham to Studio 10. Nice to see you, Dave. Finance expert Dale Gillham from Wealth Within. It's nice to see you.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
good evening and welcome to Wealth Within Live, the stock market show where we take your questions and give you our answers on all things investing and trading. Thank you for tonight's show. Well, taking you through tonight's show is our senior analyst and trader, Janine Cox. And I'm Dale Gillham, the chief analyst here at Wealth Within, and we are Australia's most trusted stock market educators.
Hi everyone, it's good to be back again, and as always we have some very important information to share with you tonight, including our thoughts on the market. We're going to look at one of the top 20 stocks on our market, and of course we also will be asking you to tell us which stocks you'd like to hear from us about. We look forward to answering as many questions as we can. We always try to get through them. So make the commitment to yourself to get more out of the show by asking questions that matter to you. Now, it doesn't have to be about a stock or how it may unfold. You may have a broader question to ask, which is fine too.
Now remember to ask, it just doesn't matter whether you're a complete novice or a beginner in the market or even an experienced trader. Every show is about sharing with you our knowledge and experience, but more importantly, what you told us that you need. Now tonight, as always, our goal is to share with you how you can become more profitable in today's market.
The challenge for us is to impart as much information as we can at a level that you need to hear it. Now, your awareness about the market and how to become a successful trader will grow with each show, and we'll share our many decades of experience and give you our expert opinion. Every week we'll share how you can avoid costly mistakes and make more profits.
Now remember, there's a chat box off to the right of your screen where you can ask us questions, and I know some people have already started doing that, so they've got in pretty early. But first, Janine can take things from here. So let's bring up Optimo, the charts, so we can have a look at the market.
All right, now on the screen there you can see that we've got on the left-hand side is a summary really of the All Ordinaries and also the sectors on our market, and you can see what these have done over the last week. So you can see at the top there, the All Ordinaries Index is up for about 1%, consumer discretionary about 1.4, energy 1.1. So you can see the top moving sectors there. Information technology's done well, so has healthcare. Financials have even done well, which may surprise some of us. And materials is a usual performer. Industrials doing reasonably well. Consumer staples nearly 2%. We've got communication services, so you guessed it, that'll be Telstra down at 0.8%, and utilities are also down 0.76%. Now you can see the chart there on the right of the All Ordinaries Index. This is just a quick snapshot to show you that what's happening on the market, and we can see we had 3 weeks down from the prior high there, this point here. Now following that, we've actually had a week up, which has been quite strong and surprising, hasn't it, Dale?
Yeah, absolutely. So, it's really surprised me, this market.
So this week we're currently closing around 6,327.8 points. Now, one of the things that I usually say to traders when they're starting out is don't pay too much attention to what's happening at the start of the week. It's more about what happens on Thursday and Friday, because as you know, the beginners open the market and it's the experts who close the market, as a general saying. So let's wait and see what happens towards the end of the week. But so far, it's looking strong still, which has really quite surprised us. So And good to see some of the questions coming through already.
Yeah,
so
they're
this is an interesting point on our market, but we've got more for you to talk about tonight. So
We've got a whole lot to talk to, haven't we? So that's a really good summary. I do like to look at the sectors and everything else. So, but let's go get off the charts for a second. And last week, Janine, we actually shared our thoughts on global markets, and we also showed some of our research into the US market. I know I got a lot of feedback from people saying, hey, I really like this sort of stuff, that what you're doing. So now this research we did last week, for those of you who missed it, we did look at the US market in its positive, negative years, how much each of those were. So from, you know, minus 20 or 30, how many times it hit that in a year, up to, you know, plus 60% in a year, how many times it hit that. So it's really good research. Now, it really did explain how markets spend more time rising and falling, because we used that as an example. And we said our Australian market does the same thing. In fact, world markets do the same sorts of things. So moving on from what we actually did last week, we'd like to share some research on one of the top 20 stocks on our market.
thank you, Dale. We're going to look at some research on a big stock. Guess which stock it is. Can you all guess? Maybe we should...
Well, maybe we should keep them guessing in that chat box. So if you chat in the box now, Jane's going to cover one of the top 20 stocks. So have a guess about what it is, and then we can chat about it. So how about we keep them waiting?
All right. The only clue I'm going to give you all is that it's a mining company. I'm pretty sure that many of you will know what it is. A top 20 mining company. So perhaps we can just get on with talking about it. Let's bring up the spreadsheet now, shall we? Okay.
Well, you've got Optimotion. How do you bring up the spreadsheet, Janine? You need to do that. So just bring that up on the computer. That's okay, guys. We just got to, Janine's getting ahead into it today.
Okay. So here we go. You can see on the chart there, I've got some data. Now, the left-hand side...
Did you tell them the stock, though?
Look, I'm not going to tell them. They can see it there at the bottom. Look, it's BHP. Okay. I was waiting for you to tell me whether they'd typed it in. Look, there you go.
They all did.
You've
Michael,
got Claire. She's typed it in. She
Greg
guessed it.
said CBA. CBA is not a minor, Greg, but yeah, Michael said it. John said it.
Michael, yep, good
Chris
on
Big
you.
said Rio, almost close. Benjamin says Doe.
For those of you who guessed it, well done.
South 32 we've had. Woo first, whatever that is. Woo. So.
All right, now looking at the spreadsheet we've got there, on the left-hand side we've got the years. So basically that just represents each year that the stock was trading. And then on the right-hand side, we're showing the growth. Now, what you can't see in there are some columns that I've hidden, and for good reason. I wanted to keep it reasonably simple for everybody to see. That data that's hidden is actually data that's provided to us. And so from that data, we can tell each year how much the stock or market's grown. So it's interesting to see, isn't it, how much BHP can vary from year to year looking at that data. And I'll just scroll down. You can see some of the numbers. 34, minus 34, minus 38, then you get 123%. There's some big positive numbers in there, 90s, but some flat numbers for the year as well. Zero, almost zero in here in 98, 98 and 87.
Yeah, so 87 was what? 1987.
1987 was a big correction on the market, and yet look at what happened with BHP. It was almost flat. 89, it was 43% up, coming down a little bit further. 92, it was down slightly for the year, up the following year. So you can sort of see a bit of a pattern there emerging. However, BHP gets into a block where sometimes it can fall for a matter of 2 or 3 years. So what's last year's best stock may not be next year's best stock. I think that's really one of the messages here. And looking at 1999, we can see another big move followed by a down move, the following year in 2000. Thinking about what's happening on the market all that time, and the market was actually falling during that period in 2000 to 2003. And yet BHP turned out a positive result.
Yeah, it was rising, but in that period, 96, 97, 98, which is where it was doing those tops. Remember those tops that it did?
Yes.
And we'll see that on the chart, but these were the areas there where there was, I think that's when they changed from, is it Marius Kloppers was the CEO or something?
There was all sorts of things going on with BHP, including was it Octedi and all of the problems that were happening around that time.
All that was around there.
So there were a whole lot of things with BHP, so it just couldn't move on is basically what Dale's saying during this period here. And then it recovered really nicely with the market, of course. So during the bullish run from 03 to 2007, BHP did really well. But then 2008, big decline on BHP. It doesn't show the full extent of the decline, of course, because we're only looking at the calendar year.
This is the calendar year to the end of 2008. Yeah, but the market bottomed in March 2009. So, but BHP only went down 24%, but the Australian market went down 50%. Remember?
Yeah, 55. Yeah.
So yes, it's showing you really how BHP handles these big moves down in the marketplace.
Okay, and some nice moves out of those lows. And just looking across the board again, you can see a few negative years in 14, 15, and then some more bullish years. And this is the 2019 to the present, or approximately
A couple of days ago.
Might have been a week ago when we did this. And then on the right-hand side of that, you can see I've got negative versus positive years. So of all of those, we had 12 versus 27, so 12 negative years, 27 positive years, 39 in total. And 31% of the years were actually down years. 69% were up. So it sort of fits with the model that Dale was looking at last week with the market in terms of, the market generally is up more years than it's down, isn't it?
Well, it's very similar to the data on the S&P 500, which was about 70% of the time the market was rising, roughly.
Makes sense.
So it was pretty similar to that. So to me, the exciting things that we look at in these types of data, or what we're looking at in this data, is we like to see the volatility of a stock. We like to see the resilience of the stock. And what I mean by volatility is what is its biggest months, what is its what is its biggest growth months, and what's its years.
Yep.
Biggest growth years, and what is its biggest falls in a year. So we can see how volatile it is. Now you can see its highest growth is 123.64%, and its biggest loss was 38.89. So seriously, you don't lose money on BHP if you get into it. And if you use a good stop loss, you'll lose even less.
Unless you bought it at the top in 2011 and you've had to hold it all the way for those years into the low, you've lost that opportunity really, haven't you?
Yeah, absolutely, you do.
And that's the difference between the buy and hold strategy and being more active in your trading.
Yeah, and just trading BHP based on the rules in my book, you would have done exceptionally well out of it over this whole period of time. And to me, and the other thing I look at is how many years negative does it have in a row, is the other big thing that I actually look at in that respect. And most times it's one has a negative year, then it goes positive. But the biggest time it's had downwards was 3 years. During that period of time where there was a lot of bad news about BHP and everything else. So 3 negative years in a row. Yep. But the rest of the time it's 1 and occasionally 2.
Now,
but if you
really
saw 2 down years on BHP, what would you do?
Well, look, you'd be thinking it's more likely to go up the following year. So the other interesting thing is how many years does it typically go up when it gets in a run? And you can see here we had a number of years upwards, about 7 years up in a run, 3 years. Now, 1 year minimum, but if it has a 79% growth rate in 1 year, then you're not worried if it's going to fall a bit the following year. So looking at this, you can see another big run.
Massive run.
Here again, 7 years up, interesting pattern there, a couple of years down. And now we've got 4 years at the moment. So are we at the top of that move at the moment?
Or we've got another 2 or 3 years to run.
That's the question, isn't it?
Yeah, I think most people would say, let's go for another 3 years and another 75% every year from that. But these are the sorts of things we're looking at, and we're going to cover a lot more stocks on the market regarding this sort of stuff, because what we want to share with you is how you build your portfolio a lot and look at these sorts of things in terms of what to look for. All too often people just look for the highest growth stock, but you don't necessarily need to do that, because you really do need to put it together in your portfolio a lot of solid grounding stocks, ones that are good, stable stocks, not quite as volatile, but then intersperse that with a few more volatile stocks. And Janine and I will talk to you a little bit more about that over the weeks and months coming ahead of how to do that. But for example, Telstra is a bit of a plotter, but looking at this stock's easy to trade and it's good for your portfolio because it rises 70% of the time, roughly. But you go and look at the statistics on an AMP, it's completely different. It's about 50-50. So would you rather BHP or an AMP in your portfolio? And people don't look at these sorts of things, and what they get is a portfolio of pretty much dog stocks that are all over the place, because they're looking, wow, this went up 40 or 50% last year, I'll get into it this year, and then it falls away because it's quite volatile. So there's a lot more of these we're going to do. As I said, you'll eventually see the top 20 stocks, the complete top 20 where we're doing this research on, and it really will help you to work your portfolio better and apply the rules we talk about, or I talk about in my book, Accelerate Your Wealth. So for those guys who've read it, you know what I'm talking about in terms of stock selection and how you put your portfolio together for different amounts of money and everything else. But
I think you might have had a couple of points raised on the chat there.
Yeah, we do that, and then we'll come back to some other stuff because I know you got some interesting stuff. But we've had a few comments. Let me just put my glasses on. Janine's got some stocks there that she can put in that I've already been writing down for you from that point of view. But let me just go back a quick. We're going to talk about FMG with Michael Abbott a little bit later, and Kogan, a few other things. Mick King's asking, is it possible to explain how candle patterns and volume combine to tell us more about a stock's direction? Very, very good question. Very good question. We can answer that one for you, Michael. Sorry, was it Michael? Yeah, Mick King, sorry. And we got Rosie said, hi, Dale and Janine, enjoy the show. Can you please revisit FMG? That's on the list and advise where the stop loss should be set. A couple of weeks ago, you suggested 5.98, but the stock has reached new heights. Benjamin saying, loving the great show, great sound this week. Thanks, Ben. We're finally getting there on some of this stuff. Love tuning in on Tuesday night. Thank you for your commitment to providing information. Thanks. Michael Abbott saying, be interesting to see what 1,000 invested 39 years ago would have been in today's money in BHP. If you'd put $1,000 into BHP when it floated, you would have averaged just over 20% per annum on BHP. And I think, from memory, I did this research for Studio 10. If you go and look at, go to into our YouTube channel, if there's a Studio 10 interview there that I did a few months back, you'll see that if you bought CSL or Cochlear on its float when it first floated, you'd be a millionaire over the 20 to 30 years. Putting $1,000 into it, I think it was. So go have a look at the YouTube channel. I'm pretty sure anything to do with Studio 10 you'll see up there from that. But let's go and have a look at a couple of the stocks, and then I'll read some more off the teleprompter. Sorry. Yeah, just you're going now, Janine. So you can
I thought we were going to continue on BHP because we've got some more things to discuss.
Oh, we are too. Okay,
so
sorry.
Can we go to BHP for, please?
We've got the charts up already, so bring BHP up.
It's actually not the chart I want. It's actually the news article I'm after.
Oh, you want the news article now? So, okay, well, sorry, but that's it. But I know that's something you got more interesting to chat about. So, this graphic that Janine's about to pick up. Sorry, guys, I got out of sync with everything. It was an article published in August 2008, either in the Herald Sun here in Melbourne or the Financial Review. So, if we can get the guys to bring up that for you right now, we can chat about it. So. So Jack's putting that up right now. So we've got the graphic of BHP. Now this is an article.
Now the article is interesting, isn't it? Because often you'll see articles in the newspaper about particular stocks. If we can come back to Dale and I, that'd be great. In the newspaper, you'll see an article. It'll be published saying, "Oh, look, this company's just had a fantastic result." Now, what happens when that occurs? BHP's had a 12.4% rise in profit. The article says. And it was the 7th consecutive full year record for the company.
Profit for the 7th year in a row.
Right. So now the question is, what do investors do when they see these results displayed in a big spread in the newspaper?
Is that a trick question for me, is it?
Maybe you guys can answer that.
I think it's a trick question, isn't it? But basically people just go out and buy the stock, wouldn't they? And then they tell all their friends, their taxi drivers, they get on the chat forums, they go, buy BHP because
it's doing so well. The newspaper said it's just incredible news. Yep, it's on the top of the world. And look, it had been doing well for a while, but if you look at the chart that was on that article, if you can think back to what it looked like, it really didn't show you much. And that's the thing. When we look at stocks, we're looking at the whole history of the company to see where it is in the big picture. So let's just have a look at BHP and see where we're at with BHP.
So let's bring up the charts again and we'll bring BHP up.
All right, now here I've got BHP. Now when you were looking at BHP, have a guess where it was. Right, because that article was August 2008. So I'm just going to bring back the weekly chart so we can see that there. Now, August 2008 was in the throes of the GFC, so despite the downturn in the market and everything going on, BHP's result was good, but it was at an overhang from what had already been. And this is what the chart was showing. It was showing it was making lower lows. So you can see these little moves on the market here. It was making higher highs until about the 16th of May 2008. And this was what was shown, and then all of a sudden the stock started to fall away. So this is July 2008, look what happened when the news came out. It actually rose during that time and then immediately fell through the prior low. So that's an indication that the stock is not being sought after. This was probably short-term profit takers trying to make
bring
some...
the chart right up so the guys can really see it, because I think that's really interesting, because the point where you had the pointer where the newspaper article was out.
Yeah, it's in August 2008.
By my calculations, that's at least a 25% fall already before that newspaper article came out. Is that correct?
Yeah, and that often happens when we see stocks and articles coming out. We often see that stocks have fallen before that occurs. Then they start to rise and people think, oh, look, you know, the stock's moving up, or looking at the short-term data, which is generally what they show you or what you have access to. And then the stock rises, so people try to get in on the action only to be fooled by this, and then the short-term profit takers or people in the know are getting out of the stock, and then that's what the cause of this fall was into September. We know that that was affecting the market and a lot of other stocks, because the market actually really capitulated during that time and fell away. And we see that further still with BHP, so a lot of people actually got sucked in during that period in 2008.
You've got to remember, and people got to remember, that the CEOs of these big companies, they're paid to protect that share price pretty much, and that's really what it's about. So they're never going to go out there and spout doom and gloom unless they absolutely have to.
Well, they have to declare to the market. If
they've got to declare that to the market.
Otherwise you get class actions like with QBE. She's that board, the number of times that we've read things about them is quite interesting if you look back at the history.
Yeah, it is. And the thing is, if they can find a good story, they'll stick it out there. And so that little run for a couple of months would have just been investors trying to get in, because the big end of town weren't in it. They were getting out of it and slowly divesting their portfolios, and they're not going to tell you the big end of town because they don't want competition for the share price in selling it. So they want to tell everybody else to go out and buy it, so they've got liquidity in that. So that's really interesting. So so have you finished with the chart now? Or?
Yeah, I think that's probably enough of the chart.
Cool. I'll try and get my act together for the next bit of the show after stuffing up a couple of times. Sorry, guys.
We'll forgive you.
You'll forgive me. So thanks for that, Janine. Now, I'm sure everybody found that quite interesting. I mean, I always do. I really love looking at what the news comes out with and then what's happening on the chart. And that's the first thing I do when I read news articles. I go straight to the chart and go, well, the chart is telling you what the market is thinking in very, very graphical terms. Now, it's unadulterated data, which means it comes direct from the stock exchange. It's not manipulated, and it'll tell you where the people are buying and selling, because it's not until you have something exchange hands for money that you actually get the leveler. So you know what's going on.
You really know when someone's just being driven by ego and no knowledge, when they're actually buying against the direction of the stock.
Absolutely.
I mean, there's contrarian, and there's just, you know, probably lack of knowledge, really, and a bit of ignorance in there for people who are not following this, really.
Yeah, absolutely, and that's what it is. It's the masses being manipulated. So, I mean, this sort of research is really something that Janine and I do a lot of, and so what we're actually doing here with this research is we're looking at what's buying, who's selling. We're also looking at the strength of the buying and selling. We're looking at a whole lot of stuff there in terms of the stock itself, the market, the liquidity of it. There's a whole thing that does a confluence for us to determine whether we like the stock or we don't like the stock. Are we getting in? Are we doing other stuff here? So, but we do this research a lot, or Janine and I do, and in fact, we've got a lot more of this stuff to share with you in the coming months.
That's right. This is the beauty of us doing the show on YouTube, as we're in the essence uncut and uncensored by mainstream media. Therefore, we can share with you the types of things that we only ever share with our students and graduates. Now, I know that we have a comment from someone, so how about we take a look at this one from Ian whilst you grab some stocks from the chat so that we can look at them for everyone. So this is a comment from Ian. Hi Dale and Janine, whilst I watch this live, I look forward to the recording to check if I missed anything. I've passed on a link to a few colleagues and friends interested in share trading. I'm also going to gift one of these people Dale's book. Yay. Oh, good on you. I really enjoyed Janine's insight into stockbroking tips. Thank you. I often wondered why these stockbroking tips did not agree with my basic analysis, such as that in Dale's book. And I never knew the answer and simply assumed the stock tips were based on fundamental analysis, but now realise it could also be greed focused. And for the record, I'd be happily listening to
Janine, for a full 4 hours on any day, mate. I do that all the time, so good.
I don't know if I could talk for 4 hours though. I'd do my best.
No, I probably
People say I can talk underwater.
Yeah, you can talk underwater. So, but let's go and have a look at the chart. So if we can get Jack to bring up the Optima again, and we'll go and look at the chart. So let's go to the first stock, which is API by Todd. So Todd did ask us last week, and we didn't get enough time for it. So if Todd can, we can have a look at that. So if you want to talk about API, and then I'll see what other stocks are there.
Okay, so Australian Pharmaceutical Industries, interesting stock, isn't it? And at the moment it's going up. So that's really all you're trying to do when you're looking at a chart, big picture, is one, look at the whole history, establish where it is in the big picture. There are important warning signs and things to look for, which I can't go into a lot of detail on that right here and now, but I can tell you that there's a really important level for this stock, somewhere around this high here that occurred in September 2018. So around about that level is a really important point for this stock. Now, that's why it's really struggling to get through that level, and we're seeing a bit of a rise up, so it'll be interesting to see whether it can actually push beyond that 170, 180 margin and get higher. But at the moment, really nice support underneath it here. It's showing these two bottoms that are there. If it actually were to come back and trade below this low here, I'd be quite concerned and be thinking that it's more likely to keep moving down in the short term. So that's an interesting thing on API. Resistance and support levels are always important when you're looking at stocks, but they're not the only thing to consider. Just remember that as we walk through different ones. So we've got another one from Mick King, which is ALL. Thanks, Mick, for sending that one in. Aristocrat Leisure, really interesting. Now, this is one of those ones where you almost could think that this stock was going up forever, like just the rise that it's had.
Oh, it does.
We didn't expect it to go that high, and I can remember when it was trading up to this point here through the all-time high. Often when stocks challenge all-time highs, they can actually either stop and slow down before it, as this stock did in November 2000 or October 2016. It pulled back after that. But then it went through it again. So look, and it had a nice run after that. But stocks can often stop just after the all-time high as well, which this clearly didn't. It's been an amazing run, but all good things come to an end. Just because a stock's been going up forever doesn't mean it will continue.
Todd's asking also about, he said his question on API was, it's on a steady rise. Just wondering if you think it will cycle out ex-dividend. Now, I know you've got some great views on dividends and what happens with price there, so maybe you might have to chat about that a little bit.
Okay, so ex-dividends, what generally happens is a stock will fall the value of the dividend, but if a stock's fully franked, now this is some interesting learning for you. I don't often, we don't share this just everywhere, but for you guys tonight. So if a stock goes ex-dividend, if it's a fully franked dividend, it will often go 1.5 times the dividend, or it could fall that amount. Now, if it falls less, it means it's stronger. If it falls more, then it means it's weaker. So there's a sign there. It doesn't always unfold. So these things aren't 100%, black and white, because we are talking about the market and activity, living and breathing people trading the market all the time. But that's a general rule. So I like to watch to see what happens with these ex-dividend dates, but I would not be looking to buy a stock just because it's going ex-dividend, because if a stock falls away after it goes ex-dividend, you've got to already know in your mind or have the analysis done to show that the stock's more likely to rise after that point rather than fall. So if you can pick up the dividend, great, if the stock's going to move up. But looking at this one, it looks like it could go through that high of 26.02. Sometimes stocks will rise into the dividend, depends on the type of stock it is. And where it is in its cycle, but it looks like it has the potential to keep going up in the short term, and it looks good. I mean, if the stock started to come back and then it went through this low here, that's another milestone for it, which would be a warning sign that it could keep going, because, I mean, that is a pretty strong decline. It's straight down. It's interesting to see how out of personality that was with what it had done over the past few years.
Correct. Yeah, it is quite a volatile stock, and it's a great stock to trade. It's not necessarily a good buy and hold stock. When you look at the whole history of it. So let's move on and we'll look at Boral for Gregory. Actually, Gregory's brought that up. So we've got a lot of stocks. We're not going to be able to cover every stock tonight, guys, but some of you are asking about the same stock, so we will get to as many as we can without boring you to death, I suppose.
Now, Boral's had a really turbulent history. You can see over this period in the 90s, you just wouldn't have been holding this stock. This was a trading stock. So you can still make money out of these types of stocks because they do trend at times, but obviously here you need some really good rules and to be able to analyse it to know when to get in or out. And I was talking to someone today on the phone about, doing the Trading Mentor course gives you a rule to be able to trade stocks with a particular strategy, and it's a really good base. And I use the strategy we use in that course, I use on every single stock. It's the first thing I look for to see what I can get out of a stock when I'm analysing it. But in the short course and in the diploma course, we go into many more rules and how to use those in combination, because it's about getting the best out of the stock, remember, and that's what you've got to learn how to do. Now, looking at this, you can see that Boral does have some really good medium to long-term trends. Now, I can see that, recently it's been in decline for many more years. So even though it had been rising, Dale, since this low here in July 2012 to this high, it's pretty much wiped out most of the gains in the recent fall. Again, not a buy and hold type stock, which you would know if you were looking at this sort of chart and understood that. So from now, it may actually start to find support and rise up. I've actually been watching this one to see if it does. So we're looking at how it's making these lower lows. Oops, I've just flicked backwards in time. Just a flick of the wrist there and we're back on again. And looking at this, you can see that these lows are getting lower, but they're not as far away as these other ones here. So look, it appears to be slowing down, but again, when Dale talks in his book, he talks about confirmation. So that's really what you've got to get, not guessing whether this is the bottom or not.
Well, yeah, correct. I mean, that's right away. If you said to me, is this going up or down? I'm going, it's going down.
Yeah.
That's pretty quick to, and if you're not sure whether it's going up or down, ask a 6-year-old. Just show them the chart, they'll tell you. Because they do it unfiltered. But it's like standing on the platform of a train station, the train's coming up. Are you going to get on when you think it's stopped or when it actually has stopped?
It's interesting, isn't it? Because if psychologically you've got a more positive view on things. Generally you see everything going well. If you look at a stock that's falling, maybe you're thinking, oh, this is looking good, it's about to go up. But so you've got to have a balanced perspective, is what Dale's saying. And this is where understanding the trend, and you can see the trend is still clearly down on this one. So
yeah, but I mean, it's like AMP. I was talking about AMP on my report yesterday, or my market report yesterday on YouTube. So if you haven't seen it, go and watch that from yesterday. But AMP last week made another new all-time low. Another brand new one. It was like $2.07, I think, from memory. Now we get emails and posts from people, not our students, of course, but other people going, oh, is AMP a buy now because it's cheap? But $2.07, is it cheap, or is it cheap if it hits $1, or is it, what is it? And you can't determine that from looking at that stock price just on its own. You've got to compare it to what is the value of the stock. And all too often people try and bottom pick, and bottom picking means you're going to be right.
Sounds terrible.
It does. You don't pick somebody.
What are you talking about?
We're
on a stock show here.
I'm talking about stocks. I don't want to put you in jail. So, from that point of view, I don't follow the girls around and pick bottoms, but it's about stocks. And people try and bottom pick, and you're going to get it right less than 10% of the time of actually picking the bottom. And if anybody ever says to you they bought the stock at the very lowest price, they're probably lying to you, because it's so hard to do. Or they sold it out at the highest price because it's so hard to do. You seriously got less than 10% of picking the biggest bottom or the lowest low or the highest high in a run. What we're showing people to do is actually pick the safest point, because you're better off trading in the safest areas, not the highest risk areas. So bottom picking is really, really high risk. And that's why we talk about confirmation and making sure it is rising. So, but we'll get off the charts now for a second.
Okay,
so
great.
We've done a few stocks. So
I was
let's
getting
go
carried away there. I was about to select the next one.
I know you were, but we'll get to that. I know it's your favourite FMG, and a few people have asked about it. So we'll get to that in a second. It's like the TV stations where they say, we'll get to that next, after this break. So we'll get to it. But I've got the question I remember we had the question from Mick King, and he says, is it possible to explain how the candle patterns and volume combine to tell us more about a stock's direction? So I thought we'd have a quick chat about that. Now, I don't know Mick and everything else, but I get a lot of questions from people about, I use candles. And I go, great, how do you use candles in your trading? And most people don't really understand candles as a tool, or they think just understanding, you know, harami or a dark cloud cover or a bearish engulfing pattern or a morabozo.
They're thinking, what are you talking about, some of them?
What the hell is he talking about? You know, a hanging man, a hammer, you know, all the different types of candlestick patterns. And to me, candlesticks is not something I'll ever use in isolation, because they don't work in isolation, or they hit and miss in isolation, very, very much so. And the more you watch and listen to Janine...
I think in the beginning when he showed me candlesticks, he said, I just look at this, and there was a book I remember reading on the candlesticks, and I can think back and I thought, I tried it on Commonwealth Bank, I looked at all these stocks, BHP, top 20 stocks I was analysing at the time, and I found that many false entries, reversals, triggers. I'm saying, this is just ridiculous. It actually is a lot more hard work than I believed that it needed to be. But I think that you just want to...
And then I actually finally told you the answer, right?
No, you wouldn't. And so I had to find it myself, which I prefer to do. But look, looking at the way that people set up their charts, I was just thinking about what you were saying about other people and how they're looking at candlestick charts. One of Dale's biggest teachings, and one of the best things that I've learnt in working with Dale, is learning to ignore the candlestick charts and learn to read the bar chart, to see the candles on the bar chart. See, I've only got 2 charts up on my screen, a monthly and a weekly, and I learnt how to do that over time. So in the beginning when I started, I had all sorts of things, candlesticks. I looked at MACDs for a while and found that was rubbish. Yep. And it just took a while, but you know, eventually I worked my way towards finding the right answer, thank goodness. So.
Well, it is. You see so many people with 2, 3, well, not 2 screens, but 4 and 5 and 6 screens and 8 screens. And I've had some people ring me up and go, I got 12 screens, and I go, great. Your power bill must be really good, but your trading must be really crap. Because if you've got 12 screens, you're probably not going to be a really good trader, because you're looking at too many distractions.
Or very short term.
Or very short term.
Missing out on those longer runs.
Yeah, and to me it was always about, how do I make it simple? So, you know, I read all of the stuff in the bar chart, because the bar chart's got exactly the same information as a candlestick chart. And some people don't necessarily realise that. Candles are really good at looking and showing you very quickly and visually about the emotions of the market. But what you need to be careful of is giving them weight in terms of turning a market. And what I mean by that is the question was quite specific about, you know, we're talking about, he's saying volume combined to tell us more about the stock's direction. Candlesticks, and I'll say this really, really slowly, candlesticks are only short term. So 1 to 2, 3 bars, that's it, or 1 to 2 or 3 candles around them. So candles don't make trends. So a candlestick reversal doesn't mean a trend will reverse. It might mean a short-term movement in the opposite direction, maybe 1, 2 or 3 bars.
Some people may not even know what a candlestick chart is. Did you want to show them quickly?
Well, we can, because we've got a lot of
Jack,
beginners.
can we show them Optima, please, so we can see that? See, there's a candlestick chart that I've just left on there, black and white, nice and simple to look at. And you can see that, you can see the white bars, which are indicating a rise, and the black bars indicating it's going down. When you read the bar chart, you can see all that anyway.
Yeah, you can, and the question was also about volume and candlesticks. Really, candlesticks are confirmed quite often. You can get confirmation is obviously in a second or third candle more so than the volume. Sometimes you want volume supporting the move in terms of the direction you want to go. So you're looking for candles to support your move. Depending on the length of the candle, in terms of the body is more important than the whole length of the bar, the high and the low. There's a whole range of things within candlesticks you need to read into it. But more importantly, what you need to do in understanding candlestick or using them to trade, you need to know the probability of when they're likely to turn the market. Because as Janine said a little bit earlier, you can see candlestick reversals in a lot of charts all over the place, but which ones have higher probability of turning the market or turning the stock, and turning it for how long? And that's the stuff that you really need to have, that confluence of rules and tools that we talk about in our courses. So we share with our students how to bring those together and say, okay, if you see X candle and it's doing these other things that are happening at the time, then the probability of the market turning is increased dramatically. And that's the stuff most people don't look at. They just think, oh, here's a harami, yep, the market's going to go up and I'll buy into it. But they're only getting something that's really short term, maybe for 1 day or 1 week, and then it goes back to the way it was before again. So there's a little bit more to it than just volume and whatever the candlestick reversal is.
All right. Are we
So
ready
let's
to move
go
on?
back. So that was a really good question. Thank you very much. So let's go back to the charts, and we're going to have a chart. We're going to bring up FMG now finally, so Janine can take the sweat off her brow and get into FMG.
It's
Now,
exciting.
we've had a couple of questions. I know we've had a couple of people asking about it, and I'll just see if I can figure out who they are. Because I know this one is Michael Abbott's actually asked for it. And somebody else did, because here we go. Rosie said, "Hi, darling Janine. Enjoy your show. Can you please revisit FMG and advise where the stop loss should be set? A couple of weeks ago, you suggested $5.98, but the stock has reached new highs. Thanks." Now, I think, did we do that, or was that on our student report that I did that?
I can't remember. We've
I can't
talked about
remember,
so
but
many
let's
stocks.
have a look. Because it gapped this last week, didn't it?
Yeah, I mean, it's quite amazing, isn't it, that it's kept going through there, but there are a lot of reasons for that at the moment. And looking at the $7 level, you can see how there's really strong resistance historically across that level. The stock has really struggled to get through it. It actually was in a downtrend for quite some time and then it took off. So I thought that there was a possibility it may meet resistance there, and you can see on this monthly bar, I'm just going to squash it up so you can see it a little bit better. Look how the close for the month of February was right down near the bottom 1/3 of the bar, or in the bottom 1/3 of the bar. Now that showed resistance. You can see it more clearly on the weekly chart. The following month it just took off. So we saw this big move down and all of a sudden a rise back up again. So there's been a lot happening with Vale, and FMG's obviously been able to take advantage of all of that. So it's a good climate for FMG right now. But when you see lots of gaps on the chart, runs don't last forever. Eventually they run out of steam, and we could be heading towards that point where FMG starts to slow down a bit, because it is quite steep. However, when you're trading a stock, you've got to decide, well, how much am I willing to give up of the profit? Now, generally, we would back test a stock to determine how we're going to set the stop loss. I mean, I was talking to a chap today about back testing and the importance of it, and most people that I have met, apart from the students that we've taught, don't have a really rounded, thorough idea and a broad idea at the same time of back testing and how to put it all together. And so my answer to your question would be it's a back testing answer. However, a simple strategy for managing the risk as a stock's rising is to trail the stock up under the last swing low, which we've got a number of them here. So there was a trough there in March 2019 and a swing low. Now, these are what swing lows and troughs are. It's just a movement up and down into a low, up and down into a low. Follow the bouncing ball. If a stock takes out the low, then of course you're out. That's simply it. But again, a better way to find a stop loss is to back test the stock and actually know what's worked over history.
Yeah. And that's the thing is people often, I know people with on the YouTube channel and on a Facebook page, and people asking questions who are not students of ours. They go, where should I buy this stock? Or where is a confirmation of a buy? Where is a confirmation of a sell? And like I said last week, we actually don't really tell you exactly that. It should always be your rules, because unless they're your rules, you're never going to follow them. And it really needs to be consistent, and it's about context and content. So what's the context of your trading?
Yeah, because we could say, look, you can set a stop loss and whatever that is, and then you try that on the next stock and it doesn't work in the same way, because it's a different stock, different personality.
Yeah, and we may have other rules for that sort of stock to do different things. And it's sort of like if, let's say that we were having a chat and there was a Ferrari sitting there and I gave you the keys to the Ferrari. I said, oh, here's the Ferrari, it's yours. Take it, go for your drive. Now,
You've got lots of friends all of a sudden.
I know, I've got lots of friends all of a sudden. They jump in the seat and they're really, really excited. But then I go, just before I go, oh, the brakes don't work, by the way, and the steering's a bit dodgy, and I walk away, but it's your car. What would you do? And the thing is that that's what a lot of people do with their trading. They get into this fast vehicle, but something that looks fast and sexy, but they don't know how to stop. They don't know how to drive it, and they think they know how to drive it, turn the steering wheel, etc. But because the steering's not real good, and the brakes aren't there, they're going to be super, super dangerous. And that's how most people will attack the share market. Buying a stock is only part of the whole journey to being a successful investor or trader, and anybody can buy stock. That's the easy bit. Just throwing a coin in the air and go, yeah, I'll buy that, or looking at something like in the newspaper, like we saw with BHP, just buy that, you know. But it's the management and when to get out at the proper times and using the proper stop losses, and that needs to be really suited to you and your style and who you are and your intent.
We have had people say to us, oh, look, what do you think about stop losses? And we might have said, well, if you're trading more medium term, the stop loss would be X. If you're trading shorter term, the stop loss might be Y, but still it's got to suit you and what you're doing and the strategy for your portfolio, like Dale's saying. However, then the stock triggers it and you follow where we would set a stop loss, then the stock turns around and goes back up. You don't get back into it, but we do, and then you're thinking, oh, well, they told me to sell it at this stop loss.
Yes.
You know, because our role is to manage risk, ultimately. That's what it is. We don't know exactly how a stock or market's going to unfold. We've got a reasonable idea because the history tells us the big picture, and often it's quite accurate how a stock unfolds in terms of what we're expecting. However, you know, there are times when stocks can be quite volatile. They take out your stocks. And as a trader, you accept that that's part and parcel of it, that you might get taken out and then you wait for a better opportunity to get back in again when the risk isn't as high. That's really what it's about.
Yeah, and probably the last thing I'd say before we go back to the charts again is that remember when we used to run a service where we run a portfolio service?
Yeah.
So we would send out an SMS and an email saying to people, just follow this. And this portfolio
Some people
style.
out there are probably thinking, oh, well, can you do that again?
Do that again. No, we won't. Because the simple thing is, we actually gave people 100% money back guarantee that they would make money. If they didn't, we'd pay them their subscription fee back. But all they had to do to get their money back was to show us the contract notes that they followed everything that we said to buy and sell when we said to buy them selling. And 100% of the people that asked for their money back because they lost money, they didn't follow what we said. And when we sat down with them and said, here's all the recommendations that you got, and when you got them, and we sat down with the money they had and worked it out with a calculator spreadsheet with them, all of them would have made a shed load of money, and all of them went, oh.
A what load?
Shed load of money. I said shed. I was being nice. But they would have made a lot of money, and then they realised how much they were affecting their portfolio returns. So it doesn't matter whether we say get in here or get out there, because we know most people won't follow that properly.
Look, most people, if they're honest, will tell you they can buy, but they're not sure about how to sell.
Yeah, so that's really where we're coming from in all of that anyway. So let's get back into the stock. So we've got some more stock.
So the moral of the story is learn how to do it yourself so that you don't have to ask someone to do it. Because it's what's that saying? Don't be the big feeder of, feed yourself for life.
Okay, that's the fish story.
The fish story. Okay. You know the fish story out there.
Teach a man to fish. So that's what we have to do. So let's get back onto the chart.
Next
now we've got a question. It's Kayong. I'm pretty sure I'm saying that right. Kogan. He's wanting Kogan.
Okay, Kogan. Now we can see this stock has had a really rough time. It's fallen dramatically, so I'll quickly just show you, just to get a good idea of how far this stock has fallen. I also want to show you how far it rose, so we can see what the upside was when it actually got going. Now, remember how we talked about in one of the other reports that often in the first 12 months, the stock will be trading lower than its list price. Now, I've dragged the chart over. You can see where it listed somewhere around 2016, and a few months later, it was falling into that low in December 2016. It was worth less, but it did eventually recover. But there's some really nice entry rules along the way. Like, you know, in this month would have been a nice opportunity, and then it kept rising, and there were other opportunities to buy all the way to the top. But then, you know, you wouldn't trade a stock like this on the monthly chart. One, there's not enough history, and two, you know, it's a shorter term, more volatile type of stock to trade. So quickly looking at this, what was the specific question around Kogan? Is it just a matter of interest?
I know you're asking me to go and look at the pad. Where is it? Here it is,
now,
here it is, here it is, here it is.
Now we can see it trade, while Dale's looking for that, you can see it traded up to about $10. It met resistance at around 5, and it's still struggling to get through there. In fact, it's met resistance at 5 back in October 17 and fell away for a while, and did the same thing in February. So it may actually eventually recover through this point. But at the moment, we're just watching it carefully to see whether it's going to do that. It's only 1 week up. I mean, that doesn't really tell you it's going to rise. So it's about being patient with it. So, Dale, have you a question? on Kogan? Did you have that?
I said, good evening, Dale, you're looking good. So, yeah, thanks very much. No, he didn't say that. He said, have a look at Kogan for me. Stocks look interesting. So there's no real other question other than Kogan.
Yeah, so right now, look, there's not an indication that it's going up. It's just sideways at the moment. So remember what we said before?
Yep.
Have a look at the trend. Is it moving up, down or sideways? So that's the thing with Kogan.
Steve Otts just said it. I think this is the best one yet. I think he means the best show yet. So thanks very much, guys. So.
All right, now let's keep going on with these
Amcor.
stocks.
Who's Amcor? Is Benjamin.
Okay, Benjamin, thank you very much for writing in about Amcor. Now, again, we can see that this stock does trend really well, nicely. Let's just have a look at this period here, October 1990 through to March 94. Okay, so it rose for 4 years. Let's have a look at this period here, April 2000, and it rose for 2 years. And then we had this big run, 2009, all the way up to the high in 2017. So it's not like there's a specific pattern about, how far it runs or what in time over a specific period, but it does spend a lot of time falling if you look at that. So again, this is another trading stock, I think, in terms of what type of portfolio is it going to be for? Well, because it could be a medium-term strategy that you have on this stock. It could also work very well in a short-term strategy, but at the moment, again, looking at the monthly chart, is it up, down or sideways? In the short term, it might be up for a few months, but it's still sideways over the more medium to long term. So looking at that on the weekly chart, you can see that really nice strong rise there. So this is where all the news starts to come out about stocks when they've had big runs like this. They're not telling you that it's good when it's down here and you're getting trades above trend lines, or you're getting other rules like we talk about in the Trading Mentor course. Then you're not being told that then. So if you're not in it at the moment, it's not a stock that I would be saying jump in, and it's really quite volatile and has been over the past few years, so that personality may continue. So if you were looking at it, you'd have to probably wait for a bit of a pullback in the share price. So that's all we've got on the list at the moment. Have you got more for me?
No, we've got to go back to the other thing now. So so from that point of view, but that is really, really good. We've got a few more comments there. We've got, what is it? Samuel Draper, I think he's a new one on. So good evening, Dale and Janine. Hope you're enjoying the show. Thanks very much, matey. Do you feel Z1P could go through a similar growth we've seen with APT so far? So that's one of the ones we'll cover next week. We're going to cover Z1P, Origin and PLS for Adam. I think we're covering that for, so that's fantastic. What was the other thing is, Todd's actually asking, Amcor, big entry into the USA has driven interest. Yeah, it probably has. If you look at Amcor, if you look at the monthly chart, you'll see roughly about every 10 years it has a major pullback. So that's your homework. Go and have a look at that. And it just had one a little while ago. It's around the 8th, so about 88, 2008, 2018, that sort of stuff. So go and have a look at that. Somebody said my book was awesome. I can't remember who it was, but thank you very much for that. But yeah, so that's most of it's all just stocks now. So we'll have a look at a couple more stocks now. Let's go back to we're on the charts now. So this one is Z1P for Samuel. Okay. So we'll have a look at that.
Interesting history on that stock. Quite a volatile stock. Just looking at them. Let's just look at the weekly chart too for a minute there, side by side. Now we can see that a couple of months ago in February 2019, the stock broke above that high in 2018, so February 2018. Now that's an interesting sign because it's saying that it's gone through the all-time high, it's in blue sky, there's potential for upside, so your analysis would tell you where the next level of resistance is likely to be, the next significant level of resistance. And so far it's pushing towards that, but often stocks run out of steam when they've gone like this. I mean, look at the history, has it ever done that before? Not exactly like that, so we're in sort of new territory with it. If you're in it, you'd be just hanging on for the ride at the moment and making sure you've got a stop loss ready to go.
Yeah, I looked at some of these companies about 2 weeks ago. I think it was from my weekly report, because obviously there's about 4 of these companies.
You were looking at
now
smaller ones, were you?
Well, yeah, all these smaller ones.
Changing it up a bit?
Yeah, I mean, people think, they see Afterpay, they did so well, so they think any stock in this space is going to go and do, have rocket fuel shoved up in and take off, and go up 300, 400, 500%. But the more competition you get, the harder it is for them to make money. And so really, so there's a few of these Afterpays. This one, there's about 4 or 5 of them now, and there's more coming on board all of the time.
So it could have a run for a few more months, and then it might run out just as everybody decides it's time to buy them.
Yeah,
buy the
and
stock.
generally when you find out about them, they've already, or most people find out about them, they're getting into the end. Because that was the other thing I was talking about. I think it was about 2 weeks ago on my weekly report, I was showing how volume really increases towards the end of the run. So that's sort of going back to the candlestick question and volume. Is people overuse volume. They really, really do. I've so many people go, I go, why did you buy this stock? And they go, oh, it's gone up 10% in volume's increased. And I went, yeah, and what? Because it's really not a strategy to buy stock. It really isn't. It's very, very loose. So, but volume, when you look at volume on a weekly basis and you see big spike volumes, it can indicate the end of a run. But I emphasise can.
Well, volume's falling, so that's a good point. So we've seen, as this stock has been stretching to its highs, we've seen this drop off in the volume. It's quite stark, isn't it? And we teach that. That's module 2, isn't it?
Absolutely. Well, yeah. So it's but it's about understanding what's going on in the marketplace. Now this thing's gone vertical, so it's in blue sky now. But unless you understand how far it's going to go, then how are you going to manage it? I know I've spoken to people before looking at charts like this, and I go, hey, okay, you can get in, but where are you going to get out? And what's the trigger for you to get out? Because really, unless you've got brakes in your car, why would you drive it? Because you just don't know.
That's a really good point. Good analogy.
It is, and and a lot of people try and drive the car while they're sitting in the passenger seat. They want everybody else to make the decisions for them, but they'll sit on the passenger seat and enjoy the ride.
Just remind me to never get in your Ferrari.
No, I don't want to get in yours. I've seen you drive. So let's get to the next one. Origin is Peter Jury. So thanks, Peter, for giving us that stock. I think that's the first one we've had from Peter.
All right, Peter. Lovely choice. Interesting though, isn't it? Again, we had that big sideways period in the 90s, and the 90s was an interesting time because a lot of stocks were actually booming during that time, and yet Origin wasn't going anywhere. And we did see a really nice run, but this is where when I'm talking about testing stocks, back testing, you want to road test your rules in the wet and the dry. So this is a good example because you've had a nice rise and a nice fall to be able to do that.
You're stealing my analogies.
I'm just going off the same theme. We're all on cars tonight. And looking at this, you can see that the stock's recently fallen down. Now, it is trying to move back up again, looking more closely at the weekly chart. You can see there that it's moved into what it's a little pattern forming, but it's not confirmed yet. And often when these patterns form, stocks will find support and then push up higher. So, I mean, if you're not already in the stock out of this low using a trend line, then you might be looking at waiting to see it continue through that level as the next run. And another strategy people use is adding to their existing positions, but maybe we'll talk about that next week.
Yeah, I think we will talk about that next week. We can talk a little bit about that. We've got a couple more comments here from people. What have we got there? Ian saying, really enjoying the show, Dale and Janine. It goes from strength to strength. Thanks, Ian. Very much appreciated. We are trying hard to really increase the quality of the show. As you know, Janine and I have put this together, and I suppose doing it on a shoestring budget, if that makes sense. We're not putting a lot into the technology, so we're looking for that. So we're trying to build, and our plan is to make this a bigger and better show, but it really is up to you to help us, because we're quite happy to keep putting the time in. If more and more people keep watching it, that's really how we benefit. So please, and I know you said you told your friends, so please, thank you very much for that. If everybody could tell their friends, spread it on Facebook and get more people watching, just makes it much more worthwhile for us. And I know people are buying my book and everything else. It helps us fund better mics, better cameras, better everything that we need and more people to help. So that it won't help me and my stuttering and stuffing up like I did earlier in the show, and it may not improve my jokes, but hey, it'll do everything else. But we've got a couple of other questions, and we'll go back a couple more charts. Todd's got an interesting question. It's on ETFs. He said ETF hack, I mean HACK, so I'm assuming that's the code for the ETF, not that ETF is a hack or Todd's a hack or I'm a hack, but looks good, especially if 5G drives security concerns with data speed in the future. Are you a fan of these types of ETFs? So we can have a bit of talk about ETFs in a second. Rick's saying, first time watching your show, really enjoying it. Thanks, Rick. Well, welcome to the show. One of your students told me about it, so thanks, Rick, and welcome to the show. Ben saying, does Dale have Ferrari shares? No, I don't, mate. I actually don't like Ferraris, but that's okay. Rick's asking what's the book called? Accelerate Your Wealth, Rick. Accelerate. It's on our website, and you can get it at bookshops and Amazon and all the other things.
Actually, that reminds me, one of the students that I'm working with after he's finished the diploma through Trading Essentials, he's actually in Vietnam. I don't know if you're watching the show, Terry, but it was just hilarious. He's put Dale's book all around Vietnam. So he's got little Vietnamese people holding up the book, and he's put it in different places.
Why are Vietnamese people little?
It was quite funny. We
They're
might
probably
show
little
you if
to
he
you.
lets us put something on Facebook and show you one of the pictures.
Yeah, we might do that as well. So let's go and look at the chart. So the next chart we're looking at is PLS for Adam
Pilbara
Davidson.
Minerals.
Yeah.
Okay, so look, despite everything going on in the Pilbara, we're seeing this stock has been down for quite a while. So look, we had the high in December 2017, and it has fallen into a low in December 2018. Interesting. Same months. May 2016, how long did it fall? April 2017. There's a bit of a pattern here. So that's, if we can't see an overall pattern on the stock, and a lot of smaller stocks, it can be more challenging to see that. We just look for what's repeating. So looking at this, you can see that the stock has been rising recently, and it's still not really out of the hot water yet. There's obvious resistance around here where it met resistance before. I'm looking at the weekly chart, or trying to go to the weekly chart, and there we have it. And you can see that it was in a really nice downtrend down here. So if you master the art of some of the rules that we talk about, you'd probably have some nice rules to be able to buy a stock like this, but then look at the volume as well. Okay, so we're looking here 34 million units a week, but multiply that by the, say, average share price over the past, few months or something, 80 cents, say, 75, 80 cents. Yep. And when you work that out, you'll see that, okay, it's not a huge number. And so you need to think about, well, look, if I put a trade on the market, is that going to shake the market? Am I going to actually have an effect on the share price? Because if you're trading stocks where you could potentially have an effect on the share price, then you're trading the wrong stocks. And be very mindful of that. Now, we've seen the volume rising with the share price going up, which is important. That's a good sign. But notice how the daily volume, the typical daily volume, is 8 million in a day.
Not a lot of money.
No, so multiply that out. It wouldn't take much to move it one way or the other. And remember that often stocks go up in stairs and down in elevators, isn't that what they say?
Absolutely. Sometimes they crash.
Yeah.
Crash and burn. So let's look at Bellamy's for Alexander for the last stock tonight. And we're already running over time.
Now, we've looked at this stock before, I think, on one of the previous shows. So, look, it's been really looking nice over the past couple of months, rising. But notice how this month, so far, we're only a few days into the month, it's traded higher, but it is stalling around that $11 mark. So look, sometimes stocks will push up and then they'll slow down for a while. So you've got to expect that. I know that some traders are quite impatient. If they see a stock go out like a bull at a gate, then they want to see it keep going like that and wonder why it's not.
Yeah, they do.
But that's not how the market works. So looking at the stock, you can see that there's this tiny little trough here, which it's not normal to see the market or a stock go down by that amount in terms of percentage terms. Generally, if you look back at the stock, it'll have at least a decent week down, week and a half, maybe 2 weeks down from a high. So it either means it's super bullish and it's going to keep rising for those people who are already in it. They're probably thinking that. But looking at that, I think that there's a short-term risk that it could take out this low, especially where it is. But remember, it is only Tuesday. We've got to wait till the end of the week to see what happens then. But I would just keep an eye on it, decide where your stop loss is going to be if you're already in it. If you're not, I would wait for a better opportunity.
Now, we forgot to answer Todd's question about ETFs. Just really quickly, Todd, Janine and I generally don't do ETFs, but obviously that's more specific on. So index ETFs, that's the stuff we just don't do. We just don't think you're better off buying the top 10 stocks. And I did an article in the US World News and Media for the US media probably late last year on ETFs and index ETFs. And I just shared with them, if you just bought 10 of the top 20 stocks on the S&P 500, you would have doubled or tripled the return of the index ETF just on those stocks. But I haven't looked at this particular one that you're talking about. I don't believe Janine has. We generally don't look at ETFs.
What was it?
Hack. So
Okay.
maybe we can have a bit of a look at it over the next week and maybe come back with you to you on that one. So, but we do.
There are ETFs and things on the commodities as well, which
Yeah.
can be quite,
There's some
can
of
be
them that
quite
can be
illiquid,
quite
and,
good.
and there might not be a lot of history on some of the new ETFs as well that you've got to be mindful of. So we're looking for a decent amount of history to be able to analyse it. So that would be something that would be a consideration when we're looking at it.
Yeah, so a couple of things. So thanks for that, Janine. So that's it for the charts for now. So we've gone off that. We're sort of running over time at the moment. And we had a truckload of comments on the chat tonight, so apologies if we aren't able to read all of those. So the thing is with we don't really get a lot of time for everything. I know there's a couple more chili dudes. I haven't got my glasses on. You said something, and Todd said hack is about IT security firms. So we'll have a bit of a look at that anyway. But a couple of things I want to say before we wrap up the show. One of them is we're launching some finance tomorrow. I think it's tomorrow or the next couple of days actually, which is basically interest-free financing for those who want to do our course. We had a few people, especially with that 10 traders that I've been looking for, or serious traders that I announced a couple of weeks ago. Now we did have a lot of people respond to that, but we just found a whole lot of people yesterday, I think the day before, that responded and their emails went into a specific area that we didn't find them. So if you did say that, hey, I do really want to be part of those 10 super traders that you want to mentor and work with, we will be in contact with you. So that is there. But as I said, it's what are they? The interest-free finance, pay now or roll now and pay later, or whatever they say it is. But if you want some details, give us a call over the next few days. But that really is the end of our show tonight. We've already gone about 5 minutes over time, and as we said earlier, we could be doing this for 4 hours, and I don't think Janine and I would ever shut up. We love to help you out and answer your questions and give you insights, and thank you for the feedback tonight. That is one of the better shows. I think we're getting the technology right, and we're getting the show a little bit better in terms of, except if I can use my mouth properly in the early part of the show. But we will get there. With a bit more practice, we'll actually get there. But seriously, we do need your help. You need to subscribe to our channel. You need to share the videos. You need to tell your friends about it, because this is really about a numbers game. If the more numbers we get on, the more we're happy to do it. If the numbers stay at these sorts of levels in the next few months, then we probably pull back from this sort of stuff. But we don't want to do that. So we do need your help to spread the word out there for us. If you do want to buy my book, it's online. It's on our website. It's on, as I said, in bookstores, on Amazon, that sort of stuff. But as I said, this does bring us to the end of the show. We've really enjoyed bringing the show to you. We've really enjoyed having your questions and your comments, so please keep them up. If you do have any comments and questions, make sure you send them to info@wealthwithin.com.au. You can send them in early and I'll bring those up earlier, so we can look at that. We love questions, so you can send them through to that. You got anything to say before we say goodbye?
Just look, keep going down the path of learning as much as you can, and we're enjoying having you giving us your feedback, and also asking about stocks, because I enjoy doing that part of the show.
Yes, absolutely she does. So I have to hold her back a little bit. But as I said, that's it for tonight's show. Goodbye, good luck and good trading.
Take care. Bye for now.